afternoon, good evening, traders from across the globe, and welcome to the 1865th edition of Short-Term Trading Live with Oscar Carboni. This 1865th installment of these educational videos, the education in these videos is the art of technical analysis. And I'm quite good at that art, so pull up a chair and pay attention. Maybe you'll learn something here. So this 1865th video coming at you on a Tuesday night for trading, Wednesday, November 28th, 2018. I've got some topics I'd like to cover on the board, but before I get to them, I'd like to remind you or educate you, futures trading, stock trading, ETF trading, trading of any nature, you know, the risk involved these days, the volatility is extreme, the stops are extreme, your account can be wiped out like that. If anybody is calling you on the phone and convincing you to open up an account with money that you cannot afford to lose, hang up on those people, because the way it is now with this volatility, if you're not a professional who puts their stops in first and understands the environment around them, you can lose way more than you think. The environment has gotten extremely volatile. So please, don't listen to anyone calling, sending you emails. If you can't afford this game, do not trade these markets. For those who can afford it, you cowboys, bing, 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 I know how you psychos are. Let's get moving. So, now that you know the risks behind this game, let's look at the good side of things. We killed it today. Thank the Lord we made some of the money back that we gave away on Monday. I think by tomorrow morning we should be in fine shape. What is on this board? For trading on the 28th, we've got a green Omni, a second green arrow. I gave you one in last night's video. The market did start to move higher. We've got a second green Omni. And again, for Wednesday, emini, S&P, and NASDAQ. So I'll tell you that, of course, I told you, well, I mentioned to you in the last two videos that there's this inverted head and shoulders building, and in my opinion, that's just the charts speaking to us, telling us that there's going to be a U.S.-China deal that will bottom us out, and away we'll go for a while. I don't know if it'll continue on for new highs, but I do think that that will probably help us bottom. Since I've mentioned that to you in these last few videos, and I started mentioning this to you, I don't know, the beginning of last week, we heard news today that the Chinese side said that there's a very good shot that we could actually have a deal, so maybe that's what we're seeing. I'll show you those charts. So, interesting that we've got another green arrow, and maybe Omni sees it too. Gold. Gold is adhering to technical analysis really, really well. We hit it well today. Let's hunt it again on Wednesday. Come to my site. I'll show you where we're going to buy, sell, or get out of gold if it doesn't work out. If you don't know what you're doing, grab my Platinum membership at livewithoscar.com. Platinum membership is me sending you the exact Omni signals, when we're going to get in, when we're going to get out, where we'll place our stops. If you'd like to be part of the crowd when we're getting in and out of these trades, just join the Platinum membership at livewithoscar.com. So, gold's adhering to analysis, and we're going to go after it again on Wednesday. NASDAQ and transportation average. Is NASDAQ and transportation average signaling a U.S.-China deal? I'll show you those charts. I think the charts say yes. And then there's this. If that is possibly what the charts are showing us, have crude and interest rates softened enough to create a rally that a Chinese deal would sustain? I think yes on all fronts. Crude has dropped dramatically since the days where I came out in front of the video, in front of this camera, and said, crude has gone way too high, interest rates have gone way too high, we are going to have to start to backpedal now. And within 2 days of that video, the market started to turn. Now, Omni gave me the call. I just came out and did it in a video. So Omni's seen that coming. We started to drop. We did drop. Now we're at a point that Omni's starting to turn bullish, at least for the last couple of days. We know we're getting closer to the possibility of a China-U.S. deal. I don't know if it's going to happen or not. I think the charts say it might. And I think that interest rates have come back down, and crude has absolutely dropped enough to possibly sustain a little bit of a bottom here. So I'll show you those charts. Those are the topics on the board. And I guess I won't spend any more time saying anything else but this. With no further ado, let's go look at some interesting charts. Okay, traders, let's start off with gold because gold is really adhering well to the technical analysis. So, hey, let's go right after it again. So I showed you that the gold was bouncing off of this trend line, and then I snapped an average on here in last night's video and said, look at this average. And then I said, you see how it keeps failing? 1, 2, 3, 4. Well, look right here. 1, 2, 3, 4. Boom, maybe 5, and then we dropped. So here we are, same sort of thing happened, and we're bouncing off the average. And I said, I think with the OMNI pointing lower, that should be a short. Now, at the same time, you would have thought that was a bull flag, and I was worried as well, but we were bouncing off a serious average, bouncing off of a spot where we tend to bounce from or drop from every time we get there. So I said, let's take the OMNI, and we went short gold, and this is where we were. And so far, that is what happened. Not bad analysis. Go OMNI, go. I think we can get lower, work our way down to the bottom here, so we will hunt down gold once again on Wednesday. Then we move to the indices. Showed you this in the video last night and last week several times and said, I think that this is an inverted head and shoulders building. Well, now I think we've gotten to the point where I can label it. It's not building, it's built. Left shoulder, head, right shoulder. The difference is that this is inverted. Now, a normal head and shoulders would look more like this, where you'd have the left shoulder, the head, the right shoulder, and that would be, you know, for the person's head, right, to head and shoulders. That would be a bearish formation. But when you have the inverted, where the head is down here and the left and right shoulders are above, that is a bullish formation. So there's a bullish formation forming. I noticed it. I showed it to you for about a week or so. I think it has now formed. And I've got a bullish OMNI. So, hey, we're going to be bullish for trading on Wednesday. But then there's this. Look at the NASDAQ weekly chart. Now, granted, it's come down quite a bit. But this trend line's been sitting here for a long, long time. It extended out to nowhere, and it was all by itself. It held. It held. It held further back. And then you hadn't seen it again for a long time. It was sitting here, extended out in red. Boom, the market came crashing down to it. Hit like it was magic. It bounced off that line, and we've gone up since. That's on a weekly. So I went, the transportation average is building that inverted head and shoulders. NASDAQ has found legs in a channel that was drawn so long ago, I didn't think we'd ever see it again because we started to move up this way, and we got up to here, and I figured we'll get above the channel, we'll never see it again. Well, it stopped at the high of that channel and went right to here. So, if it seems to bounce off of here, and when it gets up here, it seems to drop, and when it gets here, it seems to drop, it dropped back to here. Why not head back up? Second reason to think, maybe, just maybe, the OMNI's onto something, and this is probably the China-US deal coming out in the charts. Then you look at 10-year notes. If you recall what basically topped the market out for a while, a month or so ago, was that interest rates spiked up. How does that work? When 10-year notes or bonds go down, interest rates go up. They're exact opposite of one another. So interest rates are up when bonds go down. That's how this works. So if U.S. bonds are going down, interest rates go up. And they didn't just go down, they spiked. The market spiked down, interest rates spiked up. So that, combined with the high price of crude, prompted me to start doing videos to tell you it looked like the market is going to crack a little. We have had our crack. Since that crack, there's this. Look at how much bonds have recovered, which means the opposite of this. If the bonds started to go up, opposite, doesn't it mean that interest rates have started to go back down? Yes. As bonds go up, interest rates go back down. So interest rates are not breaching 3% any longer, and they sort of, they edge their way back down in interest rates, up in bonds, down in interest rates. And then you've got this. The price of crude was here, just like when I showed you on the bond chart. Bonds were down low. Well, the price of crude has dropped dramatically, and the price of bonds have gone up. So the price of gas and crude has dropped, and interest rates have tamed a little. maybe those two things, along with the technical picture, are showing us that we are going to get a deal with China, and these charts are showing us why. So I wanted to present that to you. Now let's just look at something else. NASDAQ chart once again. After everything I just showed you, doesn't it make sense that we should hold right there and start to move up from here? So that's the call, at least for trading on Wednesday. We'll take it one day at a time, but that's my argument for why the Omni has turned green for the last few days. Traders, come join me at livewithoscar.com. Okay, traders, you've seen the charts, and now you've got my view of why I say gold is adhering to analysis. So let's hunt it down again on Wednesday. Now, you see the picture I just painted for you? If NASDAQ and transports are starting to show something, maybe it is the fundamentals coming out in the charts first, as I always profess. Maybe, as I've been saying since last week, that the charts are now starting to point towards a China-US deal. And again, one of my main reasons, besides the Omni flipping, when we were at the highs a month or so ago, was that crude and interest rates went to a point that I knew it would crack the market. Have they softened enough to create a rally now? That's what that chart segment was there to show you. I hope you see what I've seen in the charts. All right, traders, that's about it. Come on down to livewithoscar.com. Join me in my live trading room, and I'll help you stay calm, collect, and I'll share my knowledge with you throughout the trading sessions. All right, so last and least, let me say, many people have written to me and said, Oscar, you got this cryptocurrency day, 361 and counting. What's it mean? Well, since we started talking about cryptocurrency, it has morphed into a new market, and now it is cryptocurrency, and Bitcoin has become Bitgroin, and it's like getting kicked in the kahuna zone in this stuff. So what else can I say? The chart goes like this. Wha-bam! And that's it. What do you want me to tell you about Bitcoin, guys? It looks like it's going to zero. I don't know. Listen, my plan was to buy it, and in 4 years I will look back and see what it's worth. I've got 3 years and 1 month for recovery. Anything's possible. But for now, it is cryptocurrency, and it is Bitcoin, and we'll leave it there until it starts to go north. All right, traders, remember, keep your emotions out of trading and your money out of Bitcoin. And remember, say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Nice. Thank you. All right, traders, I will see you at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.